International Monetary Fund says it expects sub-Saharan Africa's economy to decline by 3% this year, with a 4.3% contraction expected in Nigeria, while Ghana's economy is expected to grow by 0.9% in 2020 after recording a 6.5% growth in 2019. Bismarck Rewane, the CEO of Financial Derivatives, joins me, and we'll also be expecting John Gatsi, the Dean of the School of Business at the University of Cape Coast in Ghana, for this conversation. Thank you so much for your time on the show, Bismarck. And first, let's get your thoughts on the IMF's projections.
Projection has been with us about 4 months now. But the earlier projection thought that the pandemic will end by the close of September, October. But before then, there have been lifting of restriction across board, and that has actually engaged economic activities in the country. Therefore, it is possible that there will be some inch up in terms of meeting that growth expectation. The point I'm trying to make is that at the time that these projections were made, economic activities was totally down. Now, across board in all sectors, economic activity has resumed. So it is expected that we may record a little bit above the 0.9%.
All right, Bismarck, John says Ghana might record a little bit above the projections from the IMF. Let's get into Nigeria. And Bismarck, for looking at how things are playing out, expectations of a 4.3% contraction for Nigeria, I'd like to hear your thoughts.
As against minus 5.4, which was originally expected. So there's like 100 basis points or 1% improvement. So the IMF is less pessimistic than they were at that time. One, because obviously the data on COVID infections is not as bad as was expected. Secondly, the reopening and trade with China is going to pick up much more than what it is. And also at the time of the reopening of the economy, the original projections, the price of oil, which is Nigeria's major export, was down to $28-30 a barrel. Now we are averaging at about $42 a barrel. So the parameters the underlying parameters have changed somewhat. But more important for Nigeria is that the structural defects will also make recovery more difficult than just the shock effects. What I mean by this is that because of the fundamental problems and decadence of infrastructure, it takes a longer time to have that stimulus effect, and also a longer time to get the benefits and the multiplier from that. So whilst it goes back to underlie the U-curve recovery as against a V-curve, V recovery in Nigeria.
All right, now, John Gatsi, let's look at Ghana's recovery then. Earlier we heard from the Bank of Ghana, and they were talking about the fact that they are seeing some green shoots already in the economy.
I didn't get you.
Yes, the Bank of Ghana earlier mentioned the fact that they were already seeing some green shoots in Ghana's economy. I'd like you to speak on Ghana's recovery from the COVID-19 pandemic.
Yeah, I think there are two issues to look out here. One, the policy adjustment that the Bank of Ghana made, were to the effect that they brought relief to some businesses in real business. There are other stimulus packages that are put in place, which we cannot ascertain whether those people receiving the stimulus package will actually use them to prop up their businesses. That is where the challenge is. The Bank of Ghana's policy adjustment was actually targeted, and it actually brought some relief to businesses which are into real business. So that is where the Bank of Ghana is indicating seeing some improvement. But the huge stimulus package that have been packaged and put across, we have not actually done any study to show that the people are actually using the money on their businesses, because people were down to ground zero, and you dole out money to them without any activity of monitoring, guiding, etc. So it becomes very difficult, especially at the micro and small business level in the country. That is what is going to slow the benefit that we need to see by these packages to contribute to growth.
All right, let's look at some issues that could hinder these projections. Let me start with Nigeria now. Mr. Rewane, we're seeing the NSAS protests that continue for the 9th day in Nigeria, quite unprecedented as we're seeing things. We already saw the lockdowns already and how the impact it had on the second quarter in Nigeria's GDP. But now we're seeing this nationwide protest from the young people, talking about, what they want better police reforms. But I'd like to get your thought on this and the economic implications, because we're seeing some major hubs are being, shut because of the protests.
First, Nigeria needs this protest just as much as it needs a bullet in the head. Therefore, we need to see policymakers have to look for a way of resolving these issues, and I think they'll be resolved very quickly. But it also makes policymaking more efficient in the sense that, in a perverse way, these riots or whatever, or this protest is making the policymaking community much more efficient and responding to the needs and wishes of people. So you're going to have, without going up to the extreme point of anarchy, and we don't want that. It just means that the government, as you can see, has been responding efficiently. It's shown that it has a listening ear, and it's also a lesson for everybody to know that the social contract between the governed and the governing has to be intact, and everybody has to come along together. I think that will drive and make the economy much more efficient after this temporary problem that we have. So I'm optimistic that this will end efficiently, not only in the political space, in the social space, and because this is actually institutional infrastructure we're talking about. The police force is part of the institutional infrastructure. Even if you have physical infrastructure, if the institutional infrastructure is not consistent with the physical infrastructure, you will have suboptimal outcomes.
All right, then Bismarck says Nigeria needs this protest as much as we need a bullet in our head. Let me bring in John Gatsi here and look at some issues also in Ghana that could portend some risk to the economy. Talking about the elections coming in Ghana, I'd like to let you lend your voice to the elections and how you think things will play out going into forward, and if you could see that smooth transition in Ghana.
Well, I think we've been talking about that, but as to whether that will be a huge issue, we need to look at that from three perspectives. One is the attention that the government pays to the issues of corruption, which many people in Ghana think it has become pervasive, unattended to, with weak commitment to dealing with corruption-related matters, and they keep coming almost all the time, even at the heels of election. So that is one of the areas that the risk is. The second one is the general weak security that people are expressing in the country. You heard about the so-called separatist movement in the Volta region, and people are gauging that against the commitment of the police force, the military, and the government, and the approach they are adopting so far. But the point is that, in my opinion, up to this point, that has not gotten to a point that is affecting business activities in the country, but it's a concern for many people. As to whether there will be smooth transition, it all depends on the commitment of the government and the opposition and how the election is being organized. There are a lot of issues raised against the Electoral Commission and their posture and their comment relating to registration and post-registration period. Those are huge concerns, and people are becoming passionate about this, emotional about this issue. So the way we handle these three issues can determine whether there is going to be smooth transition.
All right, now, but talking about post-COVID-19 recovery, one of the tools in the hands of the government on how they can plan and better come out better on the other end is the budget. And Bismarck, let's start with Nigeria and look at that 2021 budget. We've seen that the president present this to the National Assembly last week, and we also saw quite a number of talking points from there, talking about how Nigeria plans to fund the deficit. I'd like you to speak on this, and also if you can lend a voice to Nigeria's debt sustainability and the challenges with FX.
Firstly, I think that the truth is that even if you're going to grow by minus 4.6%, it means that if you add minus 6 in Q2, you're going to have like minus 4.5. So in all, you're going to have like minus 4.5 and maybe minus 5 in the third quarter and fourth quarter. So but the budget has 5 elements. One is how much you're spending, and if you take that in dollar terms, the amount of spending has actually increased in dollar terms, because you're talking about how many trillion? We're talking about almost $32 billion. The revenue is not as optimistic, even though we are using $40 as the benchmark for oil, which is a bit optimistic. The revenue, the spread is about almost 3.67% of GDP. That's in fiscal deficit. Then as a tool of management, we have to understand that one, we have the complementarity and the alignment between monetary policy and fiscal policy is not that clear, because one, you can't have inflation, which has come out today at 13.71, and the stop rate on treasury bills at about 1%. So you're having a 12.7% negative return on capital. So if you are going to use that model and you are not going to mobilize savings, then automatically you are not going to mobilize investment, because you need both domestic and international investment to drive this process, because in the end, fiscal policy relies almost entirely on investment, because the government spending and the government investment multiplier is less efficient than the private investment multiplier. Having said that, but the government was very clear, one, on the cost reflective tariffs, two, on the petroleum subsidy. And so in 3 of the key variables, the government has taken a stand, and therefore we should, technically speaking, see new investments in power. We should see new investments in downstream petroleum. We should see new investments in pipelines, storage, and all of that, refining petrochemicals. Now, when the exchange rate mechanism, basically unification of exchange rates and flexibility of the exchange rate is another issue. What the government did was to commit itself to 379 as the exchange rate at the beginning of the period. I believe that the government is also committed in the ERGP to what we call a market-driven or managed floating exchange rate. So that is yet to be seen. But having said that, if 2 out of the 3 variables are looking positively, then one can be cautiously optimistic that we are going to achieve something. But I'm not so sure that we can achieve a 3% growth that is the aspiration for 2021.